Day the 13th, and the first half of the market hasn't been very bad actually. It's been more of the same that we've seen over the last few days. The fact that there has been a very narrow range in the market, 17,750, 17,780 at the lower level to around 18,100 at the higher level, anywhere between 18,000 to 18,100 at the higher level. Between this range, the market has been meandering around over the last many trading sessions, actually 6 or 7 trading sessions now. As we speak, let's keep an eye out on what's taking place. We went to 1774 this morning, which was the same as the low that we hit in December 2022, from where we saw that big rally once again. And we have recovered from those levels. That level once again has been respected. And today's recovery has been led by the banking stocks as well as the IT stocks. So those are the two factors that are doing well for the markets today. The Nifty now above that 17,800 mark. The question is whether it sustains or not, because we do have a lot of triggers to watch out for as well. I mean, the big tug of war globally is that, inflation, while it's cooling down, does that also indicate a bit of a recession or not? The US markets have been doing well. All of last 5 days, the Nasdaq has been on a gaining streak, which is the highest that we've seen since July of last year. So the global pitch is a little more favorable in this week than it was earlier. The US inflation data also largely in line with expectations. So now the question is whether FII flows will come back into our markets or not. In just the month of January, we've seen almost $2 billion being shaved out or pulled out of our markets and deployed into perhaps some other neighboring regions as well, and as a result of which our indices have been underperforming or perhaps staying in a range itself. But more about that in just a bit. Let's talk about today itself. What are the stocks that are doing well? What's taken the Nifty higher actually is the way Infosys has performed. Infosys yesterday reported its numbers post-market. The stock ended marginally in the green ahead of those numbers, and today opened lower because there was a mild miss on the margins. But then the street started to look ahead and see what's in store for the company. The big positives this time around for Infosys were: one, the deal wins upwards of $3.3 billion was extremely strong at an 8-quarter high. And secondly, what we saw is that the companies increased their guidance from 15 to 16% to 16 to 16.5%. So, growth coming by in the next quarter, with them having won more deals. And the fact that, the discount at which Infosys trades versus TCS. TCS trades at around 27, 28 times 1-year forward earnings. Infosys trading at 21 times. Having beaten TCS in terms of performance, or in terms of performance expectations, for 13 quarters in a row, that means that, some analysts see a case for the discount between these two companies to narrow as well. So that meant that Infosys from lows recovered, taking higher along with it some of the other IT stocks as well, and the IT index doing well. The mid-cap IT has been the flavor of today's trading session. We've seen two divergent moves come by. Cyient, on one hand, has done well on account of the numbers that the company has reported, 13% growth, margins improving by 300 basis points quarter on quarter as well. So that stock's higher in today's trading session. But the top loser on the Nifty is L&T Tech Services, after it went ahead and acquired the Smart Wonder business from L&T, the parent, for about 800 odd crore rupees. People are concerned that, this company may put a drain on their cash, and the margins of the acquired company are also lower than the overall company, the overall margins that LTTS trades at as well. So those are a couple of reasons why that stock is lower by about 6%. Another stock which is low from the F&O pack today is Gujarat Gas. Gujarat Gas has seen a downgrade coming in from Jefferies. Jefferies has downgraded their outlook on the stock, and also the target price from 570 odd rupees to close to around 400 rupees, because they believe that going forward the upside on volumes as well as margins is pretty limited. They have trimmed their volume expectations. They believe that the company's profitability cannot compound more than 5% from FY22 to FY25, and that is what led them to downgrade the stock. It's been among the underperformers in today's trading session. But from the frontline pack, the stocks that are doing well and the ones that have supported the Nifty from the lows, it's the Nifty Bank which has moved well, and that's on account of HDFC Bank. HDFC Bank saw a swift up move towards the high point of trade, and alongside that we saw a big move in HDFC Limited as well. So both the HDFC twins have been doing well. We have the HDFC Bank numbers tomorrow, so that is something that we will watch out for. And we also have Avenue Supermarts reporting their numbers, although we do have their, both HDFC Banks and Avenue Supermarts quarterly updates as well. So some part of the street has factored some part of the numbers in, but it's the details that everyone will be eyeing. And ahead of that, we've seen a big move in HDFC Bank and HDFC Limited. Also, Reliance has recovered a tad from the lows. We're seeing a decent move in a couple of these FMCG names as well. We've seen a nice up move in ITC. We've seen a decent up move in HUL as well, and Maruti doing fairly okay in today's trading session as well. Maybe some, hopes pinned on what's taking place in the budget, and could there be any stops for rural recovery, because once that happens, we see an up move in all these passenger vehicle companies, two-wheeler companies, and FMCG companies as well. Speaking about consumer companies, an unusual loser today is Bata, down almost 4%, and it's on huge volumes. The word is that maybe it's on account of some sort of fund selling which is taking place, etc., because nothing else explains the kind of downtick that we've seen in Bata in today's trading session. So let's see how that pans out. So that's about the way the markets have behaved so far. The question is whether this recovery sustains or not. With that, let's get to answering some of your queries. We have Amir Ahmad, who's written, what is the trajectory of gold prices looking like? Gold prices, some are believing that maybe going forward it could go and cross the $2,000 per ounce sort of mark. So trajectory, as per commodity experts, etc., is on the mend. It is on the way up. Some believe that Indian gold prices also would cross that 59,000 rupees per 10 grams sort of mark. Some are also having targets upwards of 60,000 by the end of this year. So trajectory for gold looks pretty good, and that's for investment as far as the business is concerned. But if you're looking at trading, then people usually are looking at a bigger and more volatile moves on silver. So depending on your risk appetite, you can either choose gold or silver. Varun Upadhyay is saying, with good earnings by Infosys and HCL Tech this quarter, what can be the outlook for FY24? Now that's $1 million question, because while the near term looks okay for the IT stocks, we've heard them, there is still some uncertainty over FY24 because of the big R word, that's the recession. Everyone's worried about what happens with regards to recession, and even if the demand slows down, will companies be able to hold on to their margins, or will there be further margin cuts? And as if there are further margin cuts, then there could be further earnings downgrades as well. And then that would coincide with the way the stock prices have fallen, and the valuations suddenly will not look as attractive as they are right now, because both the numerator and the denominator will fall in tandem. So FY24 looks a little shaky for the IT stocks. I would suggest that you wait for a quarter more to get some more clarity on what's taking place in the global environment before making a long-term call on IT from an FY24, FY25 sort of perspective. I think we're done with that. With that, I'll leave you to enjoy the rest of your trading day, and more importantly, enjoy your Friday and the weekend as well. Have a good one. Thank you for tuning in. I'll see you.